Today, the stock market is pulling back into critical support and the bulls need to hold this support level to maintain the bull trend. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So first up, I just want to take a quick look at an idea that I posted last night because I was trading the NQ. And if you know anything about me, the triple Qs and the NQ are my bread and butter, so the majority of my focus is on those, and I did see this possibility that we were going to double top overnight and sell off today, and I presented it as a question, which is simply just a trade idea. But more importantly, during the open market trading hours, we waited for price action confirmation to confirm the idea before shorting the market, which meant we were following the price action and not just an idea. So you can see the idea was the double top, but we then had the confirmation of the price action with this very obvious bearish pattern with a double top rejection into a bear flag, which told me we are very likely going down to the triple Qs levels of 333. As you can tell, the idea worked out perfectly, but the trading was all done through following price action. This is exactly what we do each and every day on the Stocks Channel Trading Discord community, where we let the price action do all of the talking and only trade what the chart is giving us. If you would like to join the Stocks Channel Discord, you can find that link in the description below. Alright, so today on SPY, we were down 1.12%, and we did get that rejection from that critical resistance at 420, and we came down to what I consider critical support, which is right here at 414. Now keep in mind, this pullback was expected because we were getting too far overextended outside the upper Bollinger Band as we got into that resistance. And that is always going to be a great opportunity for bulls to take profits and bears to take an opportunity to short the market to the lower support levels. So now that we have that pullback, this is exactly where bulls are likely going to show up and take on risk because we still have the bull trend of higher lows and higher highs. Remember, we are breaking out above the February highs above 417. So this pullback is really just a retest and confirmation that the bulls are still buying, and that will confirm we're going to higher prices. So as I just talked about, having a trade idea needs to be confirmed with price action, and I just went over that in the introduction. So the idea is that because we're in a bull trend, we're going to bounce off support and continue to our higher targets at the gap fills at 421 and 425, and likely even hit the August highs up there at SPY 430. The confirmation will be the price action showing a positive bounce from this support zone between 412 and 414, and then confirming the bull trend with confirmation through follow through that we're going to see in the price. So as you can tell, we don't need any bias because if we break through support, we're instantly saying we're losing the bull trend, and then we'll be looking for the lower price targets at the gap fills at 407 and just below 402, and possibly even the gap fill down here at 396. So we know the possibility is to go higher or lower. Now we just need to wait for the price action confirmation and take the trade accordingly. That's what we're doing on the Stocks Channel Trading Discord community, where we let the price action do all of the talking. We know the current trend is bullish, and right now at critical support in a bull trend, we're going to be looking for opportunities to buy the dip. If you don't want to buy the dip, that's completely up to you, but there's a good chance this bull trend is going to continue until we lose critical support. And if we lose critical support, we instantly know we go to our trade plan of heading down into a downtrend to lower prices. On the NASDAQ 100 triple Qs, we were down 1.27% today, and we did exactly what I was expecting, which was the pullback to retest the breakout at 333. Remember, just like SPY, we were getting outside the upper Bollinger Band as we reached my critical resistance zone between 337 and 339, and getting overextended as you run into resistance means you are likely due for a retest of the breakout, and the breakout was the level at 333. So we are simply following technicals to the textbook pattern of a breakout into a retest. When you get the retest, you can either bounce off of the retest and confirm the bull trend to higher prices, or you're going to slice right down through it and continue to lower support levels, which is down here right around 327. There is a good chance with the rising 20 daily moving average that we could still go lower, but you need price action confirmation, which is going to be the breakdown through the support at 333. If we start to bounce from here and break the previous highs, then we're likely going all the way into the 340s, and we are very prepared to see that happening, but we need the price action to confirm the bounce. So we still have the strong bull trend, but we do recognize it's possible we go to lower supports, and we're going to dictate whether or not we go higher or lower based on what happens on the price action at triple Qs levels of 333. Do not overcomplicate it, let the price action do all the talking and follow price from that level. On the Dow Jones, we were down 0.69% today, and the Dow Jones lost that critical support at 332, which means there's a very good chance we are coming down to fill the gap at 329. Below the gap fill, we have the rising 200 daily moving average of support at 328. And if we lose all of that support, we still have a gap to fill down here at 322. So in the Dow Jones, this is risk off charting with lower highs and lower lows and breaking through support with gaps to fill to the downside. So we're not getting bullish until we can clear resistance at 336. On the Russell 2000 IWM ETF, we were down 0.47%, and intraday we were way outside the upper Bollinger Band as we ran into that critical resistance at the negatively sloping 200 daily moving average. And again, this was a very obvious short, which I did call out in the Discord server because we were overextended at resistance. There was very little chance that was going to stick, and the bulls started to sell and the bears stepped in and shorted to lower prices, which is exactly what you would expect to see. So keep in mind, these Bollinger Bands need to expand before the small caps can go close that gap at 181, which means there's a good chance we need to retest the support at 176 and get a positive bounce. And then from that higher low, as the bands expand, we will likely go fill that gap at 181. So it's not bearish on IWM until we lose support at 176. And I still think there's a very good chance we are going up there to close that gap. But that is still going to be very critical resistance, which means we will need to see that resistance breaking before we assume we're going to higher prices. If we lose the support at 176, I think there's a good chance we come down to fill the gap below 172. On the ARKK ETF, we were down 2.17% today, and just last night I told you ARKK was reaching into a critical resistance zone between 40.5 and 41.5, and this was your opportunity to short this ETF. As you can tell, that is exactly what happened as we reached critical resistance and we were getting outside the upper Bollinger Band. We saw a lot of short sellers and profit taking, and we closed all the way back down below 40.5 yet again, which means this is still critical resistance because the price action is confirming it. It is only once we start getting consecutive closes above this critical resistance that we can get more bullish, because we are still in a bear trend in the ARKK ETF and we still have gaps to fill down here below 36 and 32. On the VIX, we were up 7.67% today, and the VIX is closing back above 18, and we're getting very close to seeing whether or not the VIX has what it takes to close above 20. Remember, we are still in the bull trend while the VIX is below 20, because it's only if the VIX starts spiking above 20 that we're likely to break through critical support and start back into a bear trend. On Bitcoin, we're currently up about 1.26%, and Bitcoin is still struggling around this critical support at 27,000 and finding resistance at the negatively sloping 50 EMA and 20 moving average, which is very bearish if we see a sharp high volume rejection from this resistance because it is a bear trend. That would easily take us back down towards support at 24,000 in the rising 200 daily moving average, and we're not getting bullish until we can clear all of the resistance above, because this does look like a head and shoulders pattern which is about to break down. On Tesla stock, we were down 1.64% today, and just last night I said Tesla was getting too far outside that upper Bollinger Band and was getting overextended and was due for a cool down. And then this morning we continued to push even higher into the low 190s and got even more overextended, which meant it was even more likely we were going to get a pullback, and that is exactly what happened. You can see all of this happened on very high volume, and this could be a pivot which is going to put in a lower high before we continue lower. However, there's still a very good chance we are going to 197 and at least touching the negatively sloping 200 daily moving average right around 200. No guarantee we have to go higher, but you can stay bullish as long as we're above 183. If we break through 183, then you're instantly getting a lot more risk off for the retest below between 173 and 175. This is a short-term bull trend, but a longer-term downtrend, which is evident by price action below the negatively sloping 200 daily moving average. So use proper risk management in Tesla stock, and you're instantly getting risk off if we break through this support level. On Apple stock, we were down 1.52% today, and Apple gapped down yet again. And Apple is right on top of critical support at 171, which is also a rising support trend line. If Apple starts to break down, it's going to look like it's ready to go through a correction, which is going to mean we likely come down to close the gaps at 167 and then test support at 163. However, that requires the loss of this support at 171, so manage your risk right there at that level. And if we start to bounce, we'll be looking for gap fills above 173 and just below 175. On the financials, we were down 1.16%, and the financials are still getting rejected from that resistance at 33, and the price action is back below all of the moving averages yet again. So there is increased risk that we are still downtrending down towards this gap fill at 31. On the industrials, we were down 1.2%, and we're back down below a lot of the moving averages on the price action. We're waiting to get bullish until price can clear resistance at 101.5. On the healthcare sector, we were down 1.1% today, getting rejected below the support at 130, and price action is below all of the moving averages. So we are starting to look bearish in the short term with the downtrend as long as we're trading below 130. We need to get back above 130 and the 200 daily moving average at 131 to start getting more bullish. On the energy sector, we were up 1.07%, still finding resistance at $80 and still below the negatively sloping 200 daily moving average, and I still think there's a great chance we're coming down to fill the gap at 73. So jumping back over to the S&P 500, this is still a pullback within a larger degree bull trend until we lose critical support, so make sure you have realistic expectations and you're letting the price action do all the talking. Remember, the noise is going to be very loud this week with the debt ceiling, so you need to follow the chart and be very disciplined with your trade plan, and your trade plan should know what you're doing in the bullish scenario and the bearish scenario. Once you know both scenarios, you simply need to let the price action guide you on which one is playing out, and then just trade it accordingly. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts, which only trades ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you'd like to join Bank Trade Alerts or the Stocks Channel Trading Discord community, you can find out how to join by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.